Time now for top picks with Lorne Steinberg. All right, Lorne, first of all, you brought us JP Morgan Chase & Co. Why is this your preferred U.S. American bank right now?
JP Morgan has been, for us, by far the best run U.S. bank for the last many years, and CEO Jamie Dimon has just done an impeccable job along with the management team. They've managed to avoid, stepping into any buckets, delivered really consistent growth, and they're really number one in their major businesses across the board. They're extremely well capitalized. Some might say slightly overcapitalized, but they would rather play it safe. But the stock has been knocked down with all of the other major banks, as we mentioned earlier in the show. And so at the current valuation page, you're basically buying this company for 10 or 11 times earnings, with a fat 3.5% dividend yield. And JP Morgan has been using excess capital to buy back shares, increase the dividend, and will keep on powering forward. So, here's a perfect opportunity to buy a best-in-class business.
Next up is Kraft Heinz. It's another of your top picks today. You tell us that you're heartened by the company's recent major restructuring. What was so encouraging about that?
So first of all, Kraft Heinz got itself in trouble. Warren Buffett Berkshire Hathaway owns over 25% of the business when he backed 3G, which is notorious for its massive cost cutting. And they went overboard, cut costs too much, made a bunch of acquisitions, debt went up to $30 billion, and they underinvested in their core brands, which caused profits to really take a tumble. In the last few years, they cut their dividend to a level that is sustainable, which is still a 4% yield. Debt has dropped because of free cash flow from $30 billion to $20 billion. They've massively reinvested in their brands. They're ready to start growing again. But one reason we like the stock has nothing to do with one of their newest products page, which, believe it or not, is basically a popsicle that tastes like an Oscar Mayer wiener.
Ew! No! Why?
I don't know, but it's all over the web, and I ask myself that question, and no, I will not be trying it. But except for that, the company is trading. It's one of the cheaper, really lower valued consumer product stocks that is growing in, and this is a nugget in a sector where it's hard to find value.
When I was thinking about Kraft Heinz and when I saw your top picks today, I thought immediately of Kellogg, which is in sort of a similar space, which recently announced it was breaking up into 3 different companies. What do you see as a future path for the other CPG companies like Kraft Heinz?
I think it's way too early for them to even look at anything like that, as they're still reinvesting in the business, and they'll be experiencing, should be a good bump in earnings growth. So I think they want to really focus on the business at hand, get it in great shape before they would anticipate looking at something like that. And of course, there was Kraft and there was Heinz. And like a lot of situations, was that a good combination? That remains to be seen. And it may indeed be unwound someday.
Okay, and finally, your last top pick today is Smith & Nephew, which I understand is a demographics play.
Sure. Smith & Nephew is a large UK-based company, which is a global leader in things like hip and knee replacement. And, if you know people, aging population, this is a huge long-term growth area. Medical devices are not subject, to the same tough FDA rules as getting drugs approved. It's much, much easier. What's happened to Smith & Nephew and the whole sector, quite frankly, is because of COVID, a lot of elective surgeries were put on hold. So the whole sector experienced, somewhat of a drop in revenues and earnings, still very profitable, but there's a massive backlog of people who need to get these surgeries done. The shares were always expensive in this sector. We've always struggled to find value, but all of a sudden, because of the recent downdraft, these shares are trading at 15 times earnings, and Smith & Nephew will be a double-digit grower for years to come, starting as soon as next year. And so, great value in a great long-term business.
Okay.